Good day, fellow investors. We continue with our stock analysis, Adobe, that has crashed even more. We did an analysis when the stock price first crashed 40%. Now it crashed more, thus we are 60% down from the peak just a few months ago. And then I had a lot of comments asking me whether Adobe is now an even better investment than it was back then. But we have to talk about the sensitivity of the business in relation to the long-term outlook, and then you can see how Adobe fares there and at the current price. I always love your suggestions, so if you have any, please write the business name, the description, the risk, reward, and the catalysts, and that will give value to all also in the comments. Thank you. Let's discuss now Adobe 60% down, crazy. So we did this video at 400 and the stock price now is much lower. We are at 281, which shows how it crashed 60% over the last 9-10 months, and that is insane. But we have to look at the sensitivity of it to the environment and go past the craziness of the tech boom mania and see what are the real fundamentals going forward. They have made this acquisition of Figma and the market absolutely didn't like it, and they have paid 20 billion in cash and stock, which is a huge payment because they paid, yes, they paid 50 times revenues for a small business that has 400 million in revenues. That's insanity. They say, yes, the total addressable market is this, but total addressable market, growth, we know that those are very, very dangerous investment words. And now we have to see first, why did they spend so much money on something that they could have maybe built on their own? Why do they think so? Is that a sign of weakness or not? The market definitely didn't like it. But if we look at the numbers, Adobe is Adobe and still has been growing 13% year over year. The earnings, if you look at the GAAP or non-GAAP, are still there. So compared to the stock price, should be okay. They have this 2.6 billion installations. Cumulative of this 2.6 billion, maybe already 1.3 billion is on some old computers, like I have it down in my basement, a few of them. So that's also something to think about. But if you look at the numbers, the revenues are there. They have been growing no matter what, and the earnings are also there, so they are profitable. I took a look at Seeking Alpha. If you want to read through Seeking Alpha and if you want a 60% discount on the premium, please help the channel, support the channel. If you click on the description in the link below, I get a small fee if you like to get more information about your investments. But be very careful, get the information, not the decision. It's easy to get into that decision trap and not information value. Be very careful there. I warned you. And if we look at the numbers there, that's also positive that I always like. 10 years of numbers, we can see huge growth and the boom, of course, lately, huge boom in revenues, and then also net income has been growing, and we have reached 5 billion or 10 earnings per share, slowing growth a little bit, but still, what will be the growth ahead? 10%, 6% per year. There is competition, and the question is, what is Adobe's moat? I'm not using it anymore because I have it already on my computer. So let's say that they grow from the current 10 to 20 over time, and that is still, let's say, in 5 years, a P/E ratio of 15 approximately. And now you have to again think about, okay, 15, good. And this also explains one reason of the crash in the stock price. Google is now at a P/E ratio of 15. Google will be at a P/E ratio of 10, likely 5 years down the road. Adobe will be at a P/E ratio of 15. So there is the risk and reward from a valuation perspective. And therefore also I will not add Adobe to our YouTube portfolio because it's simply too risky. If they slow down in growth, everyone is after the Microsofts, Apples, Macs, everybody's after them, and the boom maybe has passed, maybe they will manage to constantly grow, but that boom, tech boom, seems like slowing down, and for me it's just simply too risky. Anything can happen. Microsoft can take them over or something like that. You can make some money, but simply too risky, and I'm not interested in following. Thanks for watching. I'll see you in the next stock analysis video.